Good day, everyone. Thank you for joining the Water and Energy for Food program and its partners for this webinar around investment landscapes that the program did. So I just want to give a quick background on why we did these things. Water and Energy for Food focuses on mid to late stage innovations at the nexus of water, energy, and agriculture, with a focus on those at the base of the pyramid and women to improve their sustainable livelihoods and increase the production of food with more efficient and more sustainable use of water and energy. To do so, we really had to have a sense of, one, who those companies were, two, who the potential investment and investors were for those companies, and three, where in the regions we're working might there be the appropriate types of technical assistance and capacity building that we could call on as the donor partners to support us in this effort. And so with that, we reached out to our partners at DAI as well as Cross Boundary and IntelliCap to undertake those efforts on our behalf. So with that, Vanessa, I turn it over to you. Thank you.
Hello, everyone. My name is Vanessa Hulkenman. I'm a senior investment advisor with USAID Invest, which is a program, as Ku mentioned, implemented by DAI. And so I will be moderating this session just to give a little bit of context on the role of Invest in this. We work closely with USAID. We're developed by USAID to work with USAID missions and bureaus to mobilize private capital for better development outcomes. And so for the context of this work, we work closely with Ku and the partners at IntelliCap and Cross Boundary to develop and execute the landscape assessments. And so we're here today to talk about what was learned coming out of these landscape assessments and how they help to operationalize the hubs that are in the process or have been set up by WE4F. And to that end, I'm going to first turn it over to Tom Flahive with Cross Boundary. And he's going to talk broadly about some of the recommendations that came out of the 4 assessments that they conducted. And so just to give you a flavor of the assessments and kind of who did what here, we first conducted assessments in East Africa and West Africa. So we have Paul Uma from Cross Boundary Nairobi that's going to be speaking specifically to East Africa. Kelly Gasper, who is now in Bangkok but was previously in Bamako and then in Johannesburg with Cross Boundary and who led the work in West Africa. We had our partners over at IntelliCap doing the landscape assessment for South and Southeast Asia. So Mukund Prasad will be presenting for his team. Jad Neema with Cross Boundary Dubai conducted the assessment for MENA. And then finally, we have Frederick Benzel, who did the final assessment for Southern and Central Africa. So how we'll start off is, as I mentioned, I'll turn it over to Tom Flahive for kind of an overview of Cross Boundary's work and some of the recommendations. And then we'll have each of the presenters speak specifically to the work they did, followed by a moderated Q&A, both from me and as well as the audience. So as questions do arise, I would encourage everyone to start populating the Q&A, and we can make sure to tag those to answer at the end. So just feel free to use that as we go through this session. And with that, I'll turn it over to Tom.
Vanessa. Hi everyone, I'm Tom Flahive. If we could just jump to the next slide, I'll just briefly speak to that. It's a fairly dense one and summarizes a number of the key takeaways and recommendations that were themes for the 4 regions that we had cross-boundary covered, so East, West, Southern Africa, and MENA. My colleagues will speak in depth about each region. Just briefly, I wanted to speak to some of the overarching themes. There's 2 that I want to hit. The first is that there is a deep pipeline of innovative companies trying to scale, and the support they need is specific types of advisory services, including capital raising. And that was nuanced in each region we covered, but always the truth. The second key theme is that investors are keen to invest despite challenges. Both global and regional investors are comfortable with the next and the sectors within it, although it's the smaller deal sizes that often come with investing into innovative companies that give them pause. The transaction cost of doing a smaller deal is sometimes prohibitive. While each region had its unique qualities, in our analysis we saw themes in the services and capital that WE4F can provide. Within services, we explored 2 broad types. One, technical assistance, which can range widely from environmental strategy to specifically recruiting, and a second broad category of investment facilitation, which means to help companies raise capital. Within technical assistance, a major takeaway is that young companies often don't know what they don't know. If you go to an entrepreneur and say, hey, we can cover the costs of working with an advisor of any type, that company will often say great, but not take advantage. Often an innovator has no prior experience working with an external advisor. So we see it as imperative for the hub to provide sourcing, vetting, and then real recommendation to innovators. The other key service that I mentioned is investment facilitation. Most companies have never raised outside capital, but the significant majority so the services most often needed here were fundraising support, that's building financial models and going out to investors to help raise capital, but also working with investors directly, helping investors execute their own due diligence into innovative companies, helping them do the research that lets them decide whether or not they should make that investment. Moving from services, WE4F also intends to deploy capital itself. We found the most powerful ways to do this were for WE4F to deploy its grant capital directly as an investor to allow a company to build its track record that for-profit investors down the road can look at. This can be accomplished by walking innovators up a stairway of capital. First, milestone-based grants, then a repayable grant, and then potentially concessional equity or debt. The other avenue is to use this capital to entice investors to enter the nexus. That's using those same grants, but using them to lower the risk for third-party investors by providing guarantees or protection of first loss. The themes I've summarized apply to every region we assessed, but let me turn to my colleague Paul Uma to go a bit deeper on East Africa.
Thanks, Tom, and thanks everyone. Really a pleasure to be here and talk about the work we did. So as mentioned earlier, my name is Paul Uma. I'm a principal in the Nairobi office of Cross Boundary, and we undertook the assessment for East Africa. So if I just think about kind of first the approach we took, one of the key things we started off was leveraging quite a bit of work we've done on transaction advisory space, but also touching on sectors such as the off-grid space, where we're seeing quite a bit of activity from agriculture players trying to develop new productive use assets. Secondly, we engage with many of the investors that we profile to identify portfolio companies within their investment mandate that cut across the nexus. But this also helped us engage with investors to assess the constraints they're facing, but also suggestions on recommendations that should be embedded within the hub. 2 last things, we obviously partnered with quite a number of the WE4F stakeholders, attended several networking events, but also conferences in Kenya, such as the Agri-Foods and Trade and Investment session. The outcome of this was 41 innovators, 37 investors, and 30 service providers that we identified. The key things that I'd mention from this is, kind of the innovators that we identified, you obviously see a high concentration in Kenya. That is due somewhat to the ecosystem that they're operating in. There's a large presence of investors in the market that are using it to leapfrog into surrounding markets. The logistics infrastructure affords quite a number of these innovators to look at surrounding markets. And then lastly, I think the one key thing that came out was the enabling environment, the presence of quite a number of actors trying to scale up initiatives in the sector, being very well concentrated in Kenya, was a draw for the country. In terms of, if we look within the innovators themselves, I think clean energy to power productive uses was a strong theme versus what we've historically seen where, kind of clean energy has been primarily focused on household uses. So within this sector, you saw a lot of companies, water pumps and irrigation, ag processing, drying and cold storage. But this also links to kind of what we saw the primary uses of capital for these companies. So working capital, as you can see, was a big component. And for a lot of these companies, really trying to make the products that they are developing be affordable. So providing, long-term timelines for the customers to pay. So embedding this pay-go model of financing for them. Lastly, I'll just comment on before we move to the next slide, is kind of the medium-term investment demand, so about 2.3 million. So you saw a lot of companies operating, I'd say about 40 to 50% of the companies that we profiled falling within this bucket, and that will link into the next slide where we'll talk about the recommendations and challenges that were being faced. Next slide, please. Great. So here, just based on the discussions across the board with innovators, investors, and service providers, grant capital was definitely viewed as a means to accelerate activity in the space. But then grant capital is structured in an appropriate manner. To my earlier point, the median investment size being about 2 million comes with its challenges. The main investors that we identified being active in the space were impact investors. So these investors have small teams, maybe one country present, so they are bandwidth constrained. So when we think about those challenges that we're facing, you think about structuring, grant facilities that can support them undertaking due diligence for specific opportunities. On the flip side of that, you can also look at these grant capital facilities in terms of milestone-based structures where it brings some sort of discipline into the innovators. So giving them access to this capital and actually seeing them actually achieve certain milestones would ultimately give comfort to a lot of investors to actually support these companies, in terms of equity, for instance, or even convertible debt. And this also talks to just kind of the gap in local bank financing that's available. So at least this grant capital would address quite a big gap in the market. The other thing was around kind of first loss capital to de-risk these business models. So looking at kind of the capital stack, integrating blended finance instruments, will encourage private sector participation, and not only equity investors, but also local bank financing potentially. If we then look at, the other side of this in terms of the service providers, the grant capital can definitely support in terms of paying for the due diligence services that it can provide to investors, but also the capital seekers in terms of raising capital, but also offering firm-wide TA functions. One challenge that we heard from companies, but also investors, is that there's not enough data that all of them can kind of pool into to use to inform kind of their scaling. There's not a pool of resources in terms of staff for recruiting that they can look to meet their capital needs. And then lastly, just talk about, kind of bringing in kind of the investor-facing aspects of it. So really providing a platform where enterprises can connect to investors, so sort of a matchmaking platform. Thank you. And I'll now turn over to my colleague, Kelly Gasper, to talk about the West Africa portion.
Great, thanks very much, Paul. Hello, everyone. This is Kelly Gasper with Cross Boundary. I had the chance to lead our WE4F West Africa landscape assessment, as Paul mentioned. This was completed back between July and October of 2019, so a bit of a different operating environment. We were ultimately able to profile 50 Nexus enterprises. At the time, Cross Boundary had team present in Bamako, Conakry, and Lagos, and we were able to dispatch further team to Accra, Dakar, and Abidjan for the purposes of the assignment. And we found that some of our most interesting sourcing of contacts was done by chasing word-of-mouth leads only once we had a team or a team member in these cities on the ground. So we're fortunate to have had this chance to be on the ground in these locations. We kind of look at the spread of the 9 different countries that are listed on the slide here. What can be taken away from this is a deliberate effort on our part to achieve a good representation across Francophone and Anglophone areas within the region and across different countries in the region. I mean, the region is mostly dominated by Nigeria, which makes up 2/3 of regional GDP and 50% of regional population, and in some cases more advanced economies like Ghana and Senegal. And we really wanted to achieve this kind of broader spread. We also wanted to take a deliberate look at the Francophone countries and understand how investors might view the currency stability provided by the West Africa and Economic Monetary Union, and whether or not that would be a positive decision-making factor for them to try to enter the region. In terms of looking at some of the innovations, we found that irrigation was the most common innovation offered, due in large part to the arid climate in much of the region, food security concerns, and the necessity of year-round production of both food crops and cash crops. We profiled some pretty interesting providers of drip irrigation technology or greenhouses, but the sort of predominant technology was offered by designers, manufacturers, and distributors of solar-powered irrigation systems, solar pumps. So as many of you, of course, will know, solar pumps are cheaper and cleaner than diesel pumps. They're powered by a photovoltaic unit, and they can be coupled with pay-as-you-go capabilities to better reach base of pyramid segments that otherwise wouldn't really be able to pay or pay outright for a unit. And this can be a really powerful intervention and can, in many cases, lead to a 3 to 5 times increase in crop yields. So very strong impact. Turning to the services, we found that there was a prevalent demand for transaction advisory, but it wasn't always matched with investment readiness. And we didn't view this as a problem. We just saw it as an opportunity, something indicating to us that a TA unit and investment facilitation unit could really add value to innovators on their journey to achieving investability. We found that about 70% of the innovators we profiled had previously worked with some form of service provider, and the majority of these had been pro bono. And despite this work, there was still further work to be done. I think there were a couple indicators we saw that told us this definitively. For example, the average management estimate for year-over-year growth in the next 5 years was around 75%, which is likely quite overstated. And of the 28 out of 50 firms that were planning for equipment purchases or some type of physical expansion, 21 of those firms stated that they were actually not yet operating at full capacity. So we detected a bit of a need for guidance in planning for working capital versus capital expenditures on productive assets. These firms on average had been around for about 7 years, but most of them had not grown very quickly. This median revenue figure of $250,000 US really wouldn't be enough to support the type of debt that these firms would like to take on to be able to execute their expansion plans. And this problem is kind of compounded by, similar to as Paul was highlighting, a risk-averse West African banking sector that suffers from different types of structural problems and ultimately finances only about 6% of investments in the region on average. All of this highlights the importance of a hands-on equity investor as a growth partner and a source of growth capital, but equity in West Africa is quite scarce. Equity investors perceive high risks in the region in part due to negative news coverage around security threats or political volatility. And when these deals do happen, they're typically too big for the cohort of innovators that we wanted to investigate. They're typically around $6 million, which would be more than these innovators need and also more that their companies could absorb at any reasonable valuation. All of this, again, reinforced our need to offer investment facilitation and quality TA, not just to the innovators, but also to investors, to allow them to pursue smaller equity tickets, hopefully by offsetting some of these more onerous due diligence and origination costs up front. Next slide, please. Okay, I won't spend too much time here. I know there's a lot of text. I hit on some of these themes on the previous slide, but just to highlight again, this $1 million ticket size is often quite challenging. It may cost as much in upfront due diligence costs to do a $1 million deal as it does a $10 million deal or $50 million deal, on which the returns would obviously be much higher. It's also worth noting, though, that in West Africa, it wasn't just these economics on a deal-by-deal basis, but really the sort of overall cost that it would take to diligence the region for market entry in the first place that came out as being important. And we'll talk more about that, I think, a little bit later on. Another thing that was highlighted, and I'll sort of end on this note, investors really care about management track record. They say that you're not so much investing in an operating model or a specific product, but you're instead investing in a management team. And we found that a lot of viable businesses in West Africa operate off a more informal commercial intuition. They don't necessarily see the value of something like an investment memorandum or a financial model. Only about a third of the innovators that we had spoken to had any experience with investors prior. And this is where, as Paul and Tom both highlighted, grants can come into play. Grants can offer management teams that may not have demonstrable track records, but do have a lot of savvy to demonstrate this in an environment where their progress is measured. If it's a milestone grant or a repayable grant, it's well documented. And this can be really transformative in terms of letting investors know that that opportunity has been de-risked and that it's safe to come back around. So I'll pause there, and with that, I'll pass to Mukund to discuss the South and Southeast Asia region. Thank you.
Kelly, greetings of the day to all the attendees. It was our privilege to be associated with the Water Energy for Food landscape study across South and Southeast Asia. Our study covered 16 countries spread over a distance of close to 9,000 kilometers from east to west across Asia. The region is characterized by a high degree of heterogeneity in terms of economic status, political systems, as well as the degree of entrepreneurial activity. There are a number of countries in the region with a mature investment as well as business services ecosystem, while there are other countries which are just about starting off on the entrepreneurial ecosystem building journey. During the study, we were able to identify 100 high growth enterprises across these 16 countries after filtering close to 450 enterprise responses, which we received through various mechanisms. Over 50% of the enterprises that we sort of finally profiled were operating in the water for food nexus, basically focusing on reducing the need for water or enable the efficient use of water during pre-harvest and post-harvest and harvest phases. The most common business models included IoT-based smart farming, solar pumps, solar cold storage systems, solar dryers, and biogas digesters to produce biofertilizers. From a geography perspective, as I mentioned, this is a pretty heterogeneous region. However, the enterprises were looking, especially from the smaller countries, were looking to expand to the bigger countries, like say in Indonesia or in India, to actually take their products and services to the farmers in these countries. And some of them were also interested in replicating to Africa. So there is clearly an interest from a perspective of the entrepreneurs to look at different markets where their solutions can be can address a market need. The solutions which had the highest potential for applications were technology solutions, obviously, things like farm sensors, solar dryers, hydroponics, aquaponics, etc. From a barrier perspective towards expansion, most enterprises cited the lack of access to funding, the difficulty in building market linkages in new and alien markets with different political cultures, with different social cultures and languages too. And finally, they also face a challenge in customizing the solutions that addresses the needs of different geographies. Next slide, please. So from the perspective of what do these enterprises need? From a headline perspective, they need, we have estimated that they need a total funding demand of $375 million, both in debt and equity. However, breaking that down, clearly our sort of understanding is also aligned to what cross-boundary found. The median investment demand is about $1 million, with a range from all the way from $100,000 to $10 million. And from within the various nexuses, there was a difference in the preferred source of funding. Water for food and water energy for food enterprises, which are largely technology-based asset-light companies, preferred equity investments, whereas the energy for food and food for energy enterprises, which have a slightly more capex-oriented business model, preferred blended finance. But most importantly, from our perspective, what we learned is the use of this capital. These are all impact enterprises which not only address an unmet market need, but also spend a lot of time and effort in actually converting that market need into a purchase behavior. So customer behavior change, ensuring that the people who use these products understand the short-term as well as long-term benefits of adopting these new ways of doing food production, was a key barrier to growth, and an area where a lot of support was need for support was expressed by these enterprises. Obviously, the other two challenges, access to finance, I think is pretty well understood. But from a regulatory perspective, I think given that this is a market where there is a significant sort of government intervention which happens, regulatory challenges became very important in terms of stability of government policies, access to subsidies, etc. So from a business and technical assistance support perspective, the enterprises expressed the need for specialized services, both for growing within the country, as well as to grow outside the country, as well as access to finance support. For example, enterprises in large countries such as India and Indonesia considered market penetration as their biggest challenge. Enterprises in these countries cite two drivers for investment: need to invest in supply chain management solutions due to inadequate infrastructure available within the country, as well as the need to invest in differentiated models of customer outreach and marketing strategies to convince customers to actually adopt their products. In other countries with more nascent an entrepreneurial ecosystem, such as Bangladesh, Sri Lanka, enterprises consider financing to be the biggest challenge. These enterprises not only find it difficult to raise adequate investment, but are also constrained by lack of customer financing alternatives. So many of these enterprises express the need that the enterprises themselves, which buy their products, or the farmers who buy their products, also need access to finance, and this is something which they would want to be sort of supported in, or there needs to be innovation from the financial services perspective. Next slide, please. From a hub perspective, basically quite analogous to what our colleagues from cross-boundary mentioned. The hub is basically focused on two activities: brokering and technical assistance. From a brokering perspective, the objective is twofold: to actually increase the flow of capital, as well as to increase the investability of the enterprises. From a brokering perspective, the focus would be on two things. From a technical assistance perspective, the focus would be on improving the enterprise capabilities to grow as well as attract investment, as well as at an ecosystem level to use the collective power of being able to actually communicate the voice of the ecosystem to have progressive gender inclusive ecosystems, as well as advocate stable government policies. With that, I'll wrap it up and pass it on to Jad from Cross-Boundary.
Thank you very much, Mukund. So yeah, my name is Jad Naimne. I'm a principal at Cross-Boundary based in Dubai. We conducted the MENA landscape assessment last November and December 2019. Next slide, please. And so in conducting this landscape assessment, we went through about 160 interviews plus to get to these 69 innovators that you see on the screen that are seeking $80 million. A lot of the themes that came up during this landscape assessment are very much in line with the themes that you heard in other regions and that you'll hear in other regions, whether it comes to the small ticket size, the mismatch between that small ticket size and what the investor is looking for, the need for TA assistance and advisory, as you'll see with some of these numbers on the right top screen here. Sort of the primary business services requested were really around developing a plan and putting it forward to a potential investor. So that's either business strategy, business development, or transaction advisory. whether it's some of the restrictions on access to capital, or the size and the age of the firm. I don't know if you've noticed, but like the average age of the firm in MENA, which is 9 years, is somewhat similar to other regions, which is around 7 years or 8 years. So is the median historic revenue in a lot of cases. I think one thing that stands out, or at least stood out for me in the assessment, which I wasn't really expecting, is the percentage of firms who received prior investment, which is at 53%, which was more than I expected, to be honest, especially when you take into consideration the age, maturity, size of a lot of those innovators, which is great and a very positive point. And one that I think the hubs can definitely build on, because a firm that has raised previous capital should have audited financials, access to ability to engage with investors, some of that groundwork that will be further improved with TA advisor and some TA assistance, but not really sort of a huge gap in order to achieve that next level. Some of the other key themes that come out as well, maybe we can go to the next slide for this. Basically, the main difference between the MENA region from sort of this landscape perspective to the other regions is what makes up the MENA region, right? So number one, there's a big difference between some of these countries. I mean, you have really about 10 countries that we looked at, and some of them are in the Maghreb, some of them in the Levant, one in the Gulf, which is Yemen, but there are quite different sort of systemic issues between those differences, and that really plays out in a number of categories, whether it's economic stability, political stability, whether it's focus on energy versus water, whether it's ability to access financing beyond sort of friends and family. And so here we really wanted to focus on what makes the region different from some of the other regions and landscapes. So if we start with political instability, for example, I mean, that's a cross-cutting theme in MENA, and one of the main causes for investor reticence, of course. We believe that some of that is more perception than fact. And as you all know, things in the MENA region change quite rapidly. So a region or a country that might seem unstable can quickly turn to be stable, and the other way around. And so being able to educate and talk through and understand and help mitigate some of these concerns for investors would, we believe, yield a lot of positive outcomes in this effort. The other interesting dynamic here is the big difference between energy and water, right? So in a lot of countries in the Middle East, energy is abundant, it's cheap, it's subsidized, it sort of crowds out innovation in energy. What's interesting within that is that these dynamics are changing, right? When the landscape assessment was done, energy prices were sort of increasing. A lot of countries were removing subsidies on energy, like Egypt. And so there were starting to be changes in the dynamics by which energy can start to really focus on innovation. Water, on the other hand, is, that's one of the most water scarce regions in the world, so a lot of water innovation is really focused. The other two main dynamics is sort of the unemployment versus the really heavy focus and reliance on the government. A lot of the companies that we actually engage is their biggest customers were other businesses, but mostly, like, if you follow the pyramid, it fell down to government entities or government-related businesses. And now I'll turn it to my colleague, Frederick.
Thank you, Jed. My name is Frederick Benzel, Principal of Cross-Boundary Johannesburg, and together with my team, I led the landscape analysis for Southern and Central Africa earlier this year. We can please move to the next slide. Thank you. We profiled 41 innovators across 9 of the 12 countries in the respective regions. And there are 2 main observations I'd like to make. Firstly, 2/3 of innovators are active in energy infrastructure and irrigation. And this reflects that the Southern Africa region is currently going through an energy crisis, which has seen sustained national power cuts, increasing tariffs, and still very low on-grid rural electricity access. And this does create a significant opportunity for off-grid solar-powered water drilling and irrigation providers, as well as solar-powered agri-processing solutions such as solar irrigation or fruit drying, solar refrigeration or fruit drying. And as was mentioned before, these can have a real impact on farmer incomes as they not just increase farming yields, but also allow farmers to realize higher prices for their products. Secondly, on the slide, most innovators in the region are now in the expansion phase. Firms are on average 9 years old, and the median revenue is almost twice that of innovators in West Africa and the MENA region. And what this means is that firms tend to have quite a clear idea of their capital needs, which is mostly CapEx funding in order to accelerate the capacity, deepen their presence in existing markets, and also to further expand regionally. If you can please move to the next slide. Our landscape assessment was certainly unique in that it took place during the height of the COVID lockdowns, and we used the opportunity to assess how innovators, investors, and service providers are each affected by COVID and how the WE4F program can best respond to these challenges. Starting with enterprises, the majority were impacted by lower sales and disruptions in their supply chain, often as a result of border closures or clearance delays, but also impacted by customers delaying orders or just being unable to pay on time. As a result, more than half of innovators expressed the need for investment, for grants, for bank loans to weather the storm, but also 40% reported that raising additional capital has become a lot more challenging. Now, what does this mean for WE4F? We believe companies would tremendously benefit from transaction advisory support to either renegotiate terms with existing funders or get assistance in approaching new capital providers. This could also include assistance in applying for dedicated COVID-19 relief funds or perhaps even rapid relief grants directly provided by the program. Amongst investors, we have seen that particularly during the first 3 months of COVID, there was a real emphasis on keeping existing portfolio companies afloat, and as a result, investors have slowed down new deal activity. But over the past 2 to 3 months, we've seen investors starting to advance new pipeline opportunities again. However, we find that they do take longer to close deals as they really dig into the resilience of companies and markets, and many are still struggling with the limitations of remote due diligence. We therefore do see a role for the hubs to make accessible virtual due diligence tools, and just as important, support investors in their on-the-ground due diligence, particularly as travel restrictions remain in place. Lastly, this is really a time where service providers can play a key role in repositioning companies and helping them to find new avenues to revenue and also to additional funding. This can be achieved by providing pre-funded transaction advisory services to qualifying innovators, but also by developing checklists and best practice training materials that can be made available across the broader Nexus firms. With that said, let me hand back to Vanessa for the discussion.
Thank you, everyone. That was great. I think every team did a nice job of drawing out both some of the similarities and recommendations, but also kind of highlighting where there are key differences, both because of the market and specific country contexts. So I think we'll dive into some of those differences in this Q&A, and as I said before, I really do encourage people in the audience to please ask questions via the Q&A chat, and I'll make sure to get to those after a few questions here. So I'm going to start off with a question that's a little bit more operational on how you approach the landscape, Mukund, but also I think it does bear it has bearing for how the hubs might operate in some of the regions that have many countries, and as you noted, are very heterogeneous in terms of their makeup. So Mukund, I know that you and your team took a slightly different approach to reaching innovators and leveraged a lot of partnerships in your work. Can you speak a little bit to that and how that might also benefit the hubs as they look to reach both investors and innovators?
Vanessa, for the question. I think clearly some of our approach was also COVID ready. In hindsight, we can say that. Yeah, I think what we benefited from very clearly was the fact that for last 20 years, we have been well entrenched in this region. We have very deep connects across all the countries with a variety of players. Let me give you 4 examples. For example, Andy in Southeast Asia and as well in Andy in South Asia. We are members of Andy, and they were a key source of references for us, both from an investor perspective, ecosystem, the business service provider perspective, as well as an entrepreneur perspective. Similarly, we have Investor Connect in Indonesia. We have our own fund operating in Indonesia. We work with them to actually source some of the high potential entrepreneurs and investors working in Indonesia, Bangladesh, Sri Lanka. We also work closely with a partner called Hatch Ventures. So that's the third one, who is basically an incubator based in Vietnam. And they actually helped us connect to enterprises in Vietnam, Cambodia, Laos, and Thailand. And finally, within India, we have a very deep ecosystem of players whom we have supported in various ways and who have supported us in the past in multiple ways. So we leverage these different types of relationships to not only source new enterprises to respond to our sort of our call, as well as we also source enterprises from our own databases, which we have built up over the last 10-15 years across multiple Sankalps to actually identify those enterprises which are operating at the nexus. So in summary, we used a range of partners, investors, ecosystem players, incubators, accelerators, as well as our own internal databases. And we also sort of leverage the power of social media to actually get the word out that we are trying to identify some of these enterprises, high growth enterprises in this space, and encourage these enterprises to respond to an online form that we had put up, which resulted in a fair number of responses also.
Thank you, Mukund. And Chad, I'll ask you similarly, since you had a similar point when you were presenting on your landscape assessment about the different types of countries, and I know that you also worked with partners on the ground to identify investors and innovators.
Thank you, Vanessa. Yeah, definitely. So as I mentioned, our landscape spanned 10 countries that are quite different and quite far apart. Most people assume that since they're Arab countries, then you won't face any language issues, or a local partner won't necessarily be useful. But on the contrary, we actually work with 2 partners, one of them based in Maghreb and Tunis. The other one is based in Jordan and Palestine. And for all of those, I mean, it was an incredibly useful and beneficial engagement. Helped us source countries and source opportunities in countries that are quite difficult, like Algeria, for example, which is known to be sort of very inward-looking and hard to get into. And yeah, our local partners were really helpful in a lot of those.
Thank you. I'm going to turn now actually to just dig a little bit more on the investors. I think we've focused quite a bit through this conversation on the innovators and their needs, which is obviously a priority. But given that both of the cross-boundary and IntelliCap teams also have great relationships with investors, I just want to talk a little bit about the attractiveness of this space to investors, and really just kind of get a little bit more context and color around some of the concerns raised by investors that could be addressed by the hub So I'll turn over to Paul first, and then Kelly as well, if you want to offer some insights from your work, that would be great. So over to you, Paul.
Thanks, Vanessa. So a lot of the investors we profiled, generally had a broad remit, cutting across several sectors, but where we found a strong participation in terms of the nexus was with impact investors. Not only because of the type of deals, not only because of the deal sizes that they were doing, kind of the $2 million range, but also kind of the range of instruments that they were able to offer, equity, convertibles, and in some instances, debt. But on the flip side of that, that also reflected, the constraints that they face. Some of these impact investors have very small teams, in some cases based in one country, but are, their remit is across East Africa. So as we think about, the feedback about the support that the hub could provide, is, how can the hub, provide them with kind of vetted and bankable pipeline of transactions so that, as they are able to kind of scan through these opportunities based on key metrics that they look for, they can then move quickly on any of these opportunities. But then added to that, still on the resource constraint side, is putting kind of grant capital opportunities that can support them undertaking their due diligence services. So, a lot of investors wanted commercial DD support, whether it's with valuation, market assessment, competitive analysis, and that's how the hub can also kind of bring to bear some of their capabilities in terms of funding service providers to undertake this work for some of the investors. And then just lastly, before I turn over to Kelly, is one point on the challenges that some of these innovators faces is also with the internal. So making sure that the innovators have the right tools in terms of building the capacity, whether it's in key functional areas, whether it's human resources, finance, and product development support, so that when they scale and kind of receive capital from outside parties, they're actually on a good path to receive that capital. So I'll turn over to Kelly to add any additional detail.
Great, thanks very much, Paul. Yeah, I think a few things I'd highlight for the West Africa region, and kind of just to draw a few comparisons. In general in West Africa, whether it's true or it's just a perception, the kind of environment, whether in terms of political stability or security or economic sophistication, is seen as being a little bit less developed than in other parts of the continent. And that can be, if you're just an investor doing kind of desk diligence and you're looking at regions, that can be evidenced by things such as the World Bank's Ease of Doing Business Index, for example. Compared to East Africa, in West Africa, the countries that we sought to create these investor and innovator connections in, the highest place occupied by one of the countries on this index was, I think, 114 or 115, which is obviously quite low compared to somewhere around the high 20s or low 30s in East Africa. So even just from the outset, investors are looking for some way to understand the operating environment, and they probably aren't too keen to outlay a lot in terms of upfront due diligence or travel. And we've had direct success offsetting some of those due diligence costs, serving as a local guide even for an investor that has decided to invest in an initial trip to what they perceive as otherwise kind of an inhospitable region. But I think the most lasting effect that an entity like the hub could have for this specific issue is what we would refer to as the demonstration effect. By carrying out transactions successfully, by having them effectively structured and successfully closed, and to evidence the subsequent growth that takes place, really is a powerful tool to kind of crowd in investors that may have at one point been skeptical. Another thing that I would hit on for West Africa is that 40% of the investors we spoke to cited as their primary concern a lack of investment readiness, but not in terms of scale and size or absolute kind of commercial viability, more in terms of informality or lack of required documentation. And what we found was curious was that on the other side of the table, the entrepreneurs, the innovators that we spoke to, they didn't think that this was a problem at all. And we saw this as being a key service, and this has been touched upon a little bit, but a key service that the hub could provide, which is helping an innovator understand what they need to make themselves attractive to investors from the investor's perspective. So hearing where there are deficiencies, from an investment committee, and then translating that into either direct or procured TA support or investment facilitation support for that pipeline would definitely add a lot of value. I think the last thing I'd hit on, and this is not necessarily unique to West Africa, although whether it's a perception or reality, as I mentioned, relative lower degree of economic development in some places does drive this dynamic, is kind of this willingness or ability to pay. I mean, we look at target populations, base of pyramid, in some cases, a collective run and staffed entirely by women. So customer segments that may not fit an innovator's kind of standard view of the market. And we then think about what could be done to extend the sale of a commercially viable innovation into this segment. And where we arrive is that with a hands-on kind of approach from investors and from the hub, there's actually a lot that can be done to structure interesting end user financing schemes. A few of these could include designing an in-house financing facility where additional working capital is brought in from outside investors to permit an innovator to extend some type of credit or an installment payment plan, assisting on the other side credit providers like MFIs or development-oriented banks by facilitating loans from other investors into these organizations specifically for this type of on-lending, or maybe partnering with firms that offer some type of pay-as-you-go solution or other innovative tech solution that would help operationalize these payment plans. These are all things where it needs design on the front end, which can be done hand in hand with an investor, and then it would really benefit as well from TA on the back end, to where after the investment has taken place, the expansion is underway, and this end user financing scheme is being put in place, that there's a hands-on approach to helping the innovator through the early stages of that.
Thanks, Kelly. I know we are almost at time. We are going to go just a few minutes over since we got a little bit of a late start in order to make sure that we address questions from the audience. And so to that end, I'll ask one last question before turning over to questions that we've received. And this one actually, Kelly, thank you for kind of touching on some of WE4F's cross-cutting themes. For those that don't know, WE4F incorporates cross-cutting themes of gender, poverty, biodiversity, and the sustainable use of natural resources. So I'm going to turn over to Mukund and ask him, because some of the recommendations that flowed out of the South and Southeast Asia assessment did touch upon cross-cutting themes, especially on gender. Can you just talk a little bit to what came out on gender specifically and any of those other cross-cutting themes I mentioned?
Thanks, Vanessa. And I think we were pleasantly surprised by the gender diversity in the entrepreneurial space. For example, 44% of the enterprises had a woman co-founder, and over 70% of them had women in leadership positions. And interestingly, and this is probably towards the investors who sort of are skeptical about enterprises which are run by women, the number of the revenue size of these enterprises, women run enterprises, was larger than, on an average, than the revenue size of men run enterprises, purely men run enterprises, if I may say so. Also, from the perspective of growth rates, the growth rates which were between women co-founded enterprises and only men co-founded enterprises, they were comparable. Both were in the 30 to 35% range on an average. So to that extent, we really were very surprised by the fact that there was such a huge diversity, as well as the fact that the market performance of these enterprises was largely comparable. However, from an investor perspective, we found not many investors who are taking an explicit gender lens. They were obviously willing to look at women enterprises, but having an explicit message in the market, they are going to support gender diverse companies was something which is not there. Similarly, from a business service provider perspective, there were also very few business service providers which were championing the from the cause of women-owned enterprises, or actually looking at addressing the challenges which they may face. So that is at an overall level how we found the landscape to be from a gender perspective. From a natural resource perspective, we realized that nudges matter. For example, most of Southeast Asia, electric-powered irrigation pumps are heavily subsidized. And we found some enterprises which are offering more resource-friendly hydro-powered electric pumps, and they found it difficult to compete with the electric-powered solar irrigation pumps just because they were not able to get access to subsidies. So here, there's a key role to be played by probably by ecosystem players to advocate for more sort of natural resource-friendly policies from the governments in question. That's what I would like to say right now.
Thank you. Thank you. I'm going to just quickly turn it over to Frederick and then Judd to answer a similar question about some of your findings and how they play out for recommendations. And Judd, I just ask you, there's a question in the Q&A on how the report might change for Lebanon. If you don't mind kind of addressing that after you answer this question as well. So over to you, Frederick, first on, I know you had some thoughts that you wanted to share on the gender recommendations and how those might play out for the hub.
Great, thank you, Vanessa. Yeah, similar to what Mukund mentioned, we found that most innovators do have female and youth representation amongst leadership, workforce, and customer base, but only very few firms actually have a dedicated program in place to deliberately monitor and advance this. So what we would recommend to the program is to develop a diagnostic for gender and youth empowerment that can be used to establish, first of all, a baseline and then track progress against the cohort. And that can be accompanied by a number of interventions. For example, an awareness program for management that demonstrates that there is a clear business case for diversity and provides concrete ideas on how the company can, in a low-cost way, adopt these measures. Or it could be something like a mentorship or leadership program for women and youth that could be offered either to individual firms or broader across the nexus. Lastly, to incentivize alignment between the social impact and commercial objectives, and there is sometimes seemingly a bit of a trade-off, the program might well consider including certain metrics or perhaps the company's vision to advance gender and youth in the selection process for enterprises. And to us, really the good news was that for many of the investors that we have profiled, and that might differ a little bit from what Mukund reported, we found that ESG criteria, and particularly gender, was very much on the radar of investors. So our feeling is that companies that are well prepared on that front will find it easier to raise capital. And back to you, Vanessa.
Thank you. And Judd, I know that for the MENA region, water scarcity, for example, played a big role in some of the innovators that you profiled. Do you want to speak a little bit to that, and then also that question that we received on Lebanon?
Sure. Yeah. So I mean, really, from a water scarcity perspective, the MENA region is really has a water issue, much more than a lot of the regions that we covered across WE4F. And that's where we see a lot of the innovators, if we compare sort of in terms of water for food, energy for food, or water and energy for food, the biggest percentage is really in the water front. And many of those are actually finding ways for water use and water reuse in a way that is sustainable and allows farmers to have the same level of yield while reducing their water consumption. And just quickly on the gender point, were quite positively surprised by the gender and youth statistics that we saw in our landscape assessment. 75% and 68% of firms, respectively, had women in leadership and youth in leadership. And a lot of those, I think, are very much in line with the fact that a lot of the companies that we find were in the innovative space. And so I think those two themes go hand in hand. And really, the hub supporting those young innovators and young companies is quite important. Turning to the question on Lebanon, yes, of course. I mean, the whole world changed since the landscape assessment. Unfortunately, a lot so in Lebanon, a lot more in Lebanon than other places. The way I see it, there's two parts, right? So the first part is that we looked at or we profiled the 8 innovators in Lebanon. It would be very important to have sort of an update on these companies to understand where they stand today in terms of their run rate, their ability to access capital, their ability to import and export and continue to produce. For me, that sort of reinforces the need for the hub, for the services of the hub, for potentially being innovative in the grant facility and providing some support that can crowd in additional sources of capital. For example, in Lebanon, there's a big need for fresh cash or fresh capital from the outside, but also a lot of depositors in Lebanon have their own what we're calling lollers that some companies can use, or sort of through a combination of those two. So to summarize it, the changing landscape across the world and in Lebanon, for me, reasserts the need for the hub and its services, maybe the need to be more innovative in how we use our grant mechanisms and how we help support investors and capital seekers.
Thank you. And I actually think that's a great note to end on. I want to thank all of our presenters today. You packed in a lot of detail in these presentations in a short amount of time. The landscape assessments are available on the Water Energy for Food website under resources. So I encourage people to take a look at those for more detail. And then, I just think like the recognition that these assessments, they are a snapshot in time, and the world has changed a lot in the months since some of these were done. But I do think that, Judd's point around, kind of reinforcing some of these recommendations and the tools that were mentioned by Mukund in terms of, the online, the partnerships. Frederick mentioned kind of the due diligence checklists and a number of other tools and recommendations were mentioned that I really do think, even if even more so, have bearing on the current context and market. So with that, I'll encourage folks to check out more details that are contained within those landscapes. And thank you very much for being here today. And we look forward to hearing more about the hubs and the work in the months and years to come. Thank you.
Thank you. Thanks, everyone.